Okay, so on TradingView.com, there's this really interesting tool that you can use that will enable you to essentially hedge against the risk or mitigate the risk of entering a trade, too early or too late. So, for example, what I'm talking about here is what we call a buy stop. Now, like I said again, this TradingView.com is going to help us see exactly what things look like. Not exactly place of any trades for real, but we're gonna see what it looks like. So it's more, it's gonna be more helpful for me to show you exactly what a buy stop is as opposed to explaining it up front. So you want to go here to the left, and you want to click this and press long position. This will help you set essentially what we call a buy stop. Now, a buy stop is essentially a place where you want to set you. So okay, when you click. Okay, so you go to the left over here. So you go to the left over here, you click this button, press long position, and then tap it over the part in which you want to put it on that graph. Okay? You can even move it around a little bit, so you can move it and place it exactly. If I want to place it up here, I can. If I want to place it down here, I can. If I want to place it over here. But you want to place it around where the graph is currently at. All right? Now, a buy stop, in very simple words, tells you that if this currency pair hits a certain price level, then I want to start buying that currency pair, right? I want to buy that currency pair. Okay, so in simple terms, if we zoom in, we have the blue candlestick all the way right here on the right, all the way on the right. Okay, and now if that blue candlestick hits all the way into the green area, then that means you're going to start making profit. Now, what this is saying is that if this price level on the right hits to where this gray line is in the intersection of the green and blue areas, then you're going to start buying that currency pair. And each time you buy that currency pair, you're making, like if you buy that currency pair and it hits in that green area, you're making money. So right now, the price is currently at 108.339 or 335. It's fluctuating. Now, this gray line in the intersection between the green and the blue in the red area, the green and the red area, is that buy stop price point. So if this price goes and hits 108.468 and continues upwards into the green area, you started making money. That's a buy stop. Essentially, a buy stop is placing a bet that if it hits this price point and it keeps going up, the price keeps inflating, then you're going to make money, right? Now you can do the opposite. You can set a sell stop. So you go over back to this button and press short position. All right. Now for a sell stop, it's the exact opposite. You want to place it a little lower than the graph. All right. Now what this is saying is that if that blue candlestick turns red, okay, let me zoom out a little bit. Let me go to 4-hourly charts. All right. Now, okay, so now the furthest on the right is a red candlestick. If that red candlestick hits that gray line and goes all the way down into the green area, I know it's kind of hard to see. Let me zoom out. Let me zoom out a little bit. Make it a daily chart. That's not making it any better. Okay. Okay, no, that's not working. Here. All right, let's just stick with the 4-hourly chart for now. So if this red candlestick goes into the green area, right? As it goes down to that area, you'll be able to see that those red and green boxes a little better. But as it hits that green area, you're making profit. Now, what you want to do is you want to click on this box, right click on it, press settings, and then you'll see exactly what these price points are. So the entry price right here for the sell stop is 108.065. So if the price of this currency pair hits 108.065 and keeps going downwards, since it's a sell stop, you make money, right? Now let's say it was a buy stop. Let's delete this, right? You right click, press settings, entry price right here. At the buy stop, 108.52 is your buy stop price. So if it hits the price of 108.52 and keeps going up, then you're going to make money. Now, what is profit level and what is stop level? Profit level and stop level are essentially what we call a stop loss and a take profit. So your profit level, take profit, is, if you press OK here, is exactly the end of this green box. So if you're placing a trade on your phone and you set the price point to hit 108.52, which is this gray line right here, and then you keeps going all the way up and hits this green, the last end of the green part, which is, if you click settings, is actually a price point of 108.89. You can see that it's increased all the way to 108.89. And what it's telling your trading agency is that you should close that trade. You want to take your profits. That's why it's called a take profit. Now, the exact opposite happens. So let's say it hits the gray line, so you enter the trade, but then it keeps going downwards, kind of like, it goes the opposite way after it hits your gray line, and comes and starts going back downwards all the way into the red area and hits the bottom of the red area. Then that's what we call your stop loss, right? Your stop loss is a point where you can stop making losses, essentially. That's literally what it is. It's 108.149. That's what we set our stop loss at. And then that's the point in which you want your trade to stop losing money. You want to get out of the trade. You want to close that position. So that's what stop losses and take profits are. You can do the vice versa for a buy stop, and you can do the vice versa for a sell stop. Sorry, we were just on a buy stop. And if you have any questions, please let me know.